Okay, we spend all day hearing about, obviously, the immeasurable impact that the war has had on economies, on business and fintech and regulatory regimes, and we've seen this expand in all sides of banking. I want to start with you, Tomasz, because we have a history of talking an impact, and I'm not going to give it to you
Pleasure
easy and kindly. Representing Mastercard in Europe, there's been a lot that has changed. How has Mastercard been placed in the right place to really make a change in a time of crisis? And in your role, seeing the fintechs around this space, tell us a little bit about what you've seen and what kind of role you think Mastercard has been able to play in this industry.
I think that we are able to play, and we are actually playing significant role in addressing this specific crisis, but also every other crisis which we are basically facing in current times. But let's focus on the example of the Ukraine. Firstly, what we managed to do, we maintained the functionality of cards as payments instruments, giving Ukrainian refugees access to the money. Yeah? They cannot, multiple times, they cannot bring cash, or they are bringing cash, yeah, but they cannot exchange it in an easy way. They cannot make transfers, but they can use cards. And despite all these wartime cruelties, these cards are still working. Second layer is distribution of humanitarian aid, which also helps reach out to people who are in need. And finally, it's totally opposite end of the way we are tackling this crisis. We simply disconnected bad guys from payment ecosystem.
Yeah. It's incredible what the role of data and identity. I've been in a few special committees with you on trying to figure out how to get payments to people. And then you really realize the layers between authentication, identification, and data. We have some neobanks and some challengers in the conversation here. Tomasz, why don't you tell me a little bit about sort of the role you've been seeing, the bank increasingly having to play in a time of crisis, and what does that mean for changing even credit models or the way we're going to lend a hand and rebuild things, right?
Every time when we have this kind of the challenge, because the crisis is a challenge for everybody, say for us as a banks, institution, financial institution, as well for our clients, our potential clients. So I think that what we have to do, we don't just need to change the lending system as such, but create the new way how we want to make easier the payments for the clients, meaning all this type of the things which give it a chance to postpone the payment, like buy now, pay later, all this type of activity, and of course, earning wages opportunities, which you already have this in the market. So I think that it's not just the pure lending, which is in front of us, but the new type of the products which clients expect for the e-commerce, for the brick and mortar as well. So I think this is the idea where we, as Aion, together with our sister company, Motyl, we want to create and to deliver the banking as a service to our client, embedded to the different type of the business. Because nowadays it's not just the bank who's facing the client in reality, but all the other entities, retailers, yeah. So all the other types of activities. So this is what we want to play the main role and focus on this cooperation, because this is what we see that we can make the progress and get the add value for the end user, because the banking is just the banking. Embedded is better.
Well, that's a positive narrative change. You still see today a lot of conversations. Yes, we're going to open APIs. We're going to be collaborative. We're going to be the marketplace. There's still APIs broken, and even when you kind of look at the traditional finance industry and crypto, there's still payments being bounced back because I don't like the institution you're going to now go bank with. So I think in a time of crisis, that only calls us for making the right decision. And a values-based decision, I guess.
Absolutely. So we have to be transparent, very, very straight ahead. So that's why we just make this kind of the monthly fee, which you kind of have to pay for everything, because nobody wants to be surprised by they say small letters in the somewhere. But if you exceed this number of the payment or this level of the due of your payment, you have the penalty and so on and so forth. So I think it's much better just to have the clear and very simple regimes, how we want to make this our term condition, and based on that, create this embedded banking with the non-financial institution which really facing the client.
Yeah, and I think the regulators have certainly proved in the U.S. and other parts that they're going to crack on, and this is going to be a regulated environment. So it kind of makes sense that when you look at embedded finance models and other opportunities to lend that, to rebuild economies, to rebuild industries, you guys got to be itching over there. Ewa, I'm going to pass it over to you. Like, what are you seeing, and what are some of the challenges or opportunities Vivus has kind of brought to bear?
Yeah, Vivus is a lending company, and what we have observed during the last 2 years is like that this is like third crisis that we are facing already. First was the COVID crisis, where people had to, like, something that was given to them for granted, like freedom to go out, yeah, to go to school, to talk and meet friends. It was not valid for some time. And the second crisis, which was the war that started in Ukraine, and both of those crises were different, but they started the same way. People didn't want to borrow money because they don't feel comfortable with that. Yeah, there is a huge uncertainty on the market, so they don't know whether or not they would have money to repay. But the first crisis during the COVID, it was with very low interest rates on the market. So it was totally different. It was connected to some industries only, like tourism, for example, catering, things like that, hotels. And right now, what the crisis that is at the front of us is the crisis with very high interest rates. And all of the people will be affected who borrow money on the market from financial industries. And role of my company is quite significant because people who already have loans will have problems to repay them, yeah, in the banks mostly, and people who don't have loans but they plan to have loans will not be allowed to enter banking system. So role of my company is financial inclusion, and we play this role quite well because the approval rate in our company is about 80% for new clients, which is
wow.
Huge approval rate. And we had some discussions with the credit bureau, the biggest credit bureau in Poland, with BIG, and there was always topic like lending companies are bringing customer into problems, financial problems, because they are, going into this
Massive debt.
Yeah, exactly. So, but I asked them to do the real research in the data. Is it true or not? And what occurred is that customers who already have problems in banks with debt repayment, when they borrow loan from company like ours or from the bank, they are more likely to get out of the problems in previous credit. And this is like true, yeah. So our products help people in the crisis, in the economic crisis, and also in the private crisis from time to time when they have it.
And I think that sentiment, that's really interesting, Did, and I'd be really curious to know and share here, hopefully next time on stage, the change that you've seen in the population. I think in a lot of places there is this sentiment of, there's a reason why it's called the poverty premium, of who pays for banking, and just this understanding of, when I need you the most, you're kind of not there. And when you look at developing countries, like most collateral loans that are for a fridge or something small, that it's, a little merchant that's out there. They can't even get that sorted because that's a one-to-one conversation. How have you seen the change now looking at protocols and, just the change in technology that allows things like a different wave of banking to actually come, not with just like, no offense to anybody, but a pretty app and a colorful card. What can I expect of what you're working on, Misha?
Wow. I would say that for the lending, it's just a function of price and credit risk, right? Mm-hmm. So what we see and what I see as and I have both lending companies in Ukraine and in UK, so it's quite a different spectrum of the regulatory environment. And I would say that in both countries, traditional banks and even newer lenders, they are very far behind in the innovation of the credit assessment
Yeah.
So they're focusing a lot in the product proposition because this is something that is easy to understand, that is what you see, right? So as you said, like to make a beautiful app or to colorful card, it's easy win.
Yep.
But
Hasn't changed banking.
yeah.
Sorry.
But then, but then, like if you go deeper into how you assess customers and how you assess creditworthiness and affordability, and whether you rely on credit bureau as a sole source of information, or you try to source all type of unconventional data and implement it in the model. So in Ukraine, we have lower approval rate though. We have like 60% approval rate, but it's still quite high with the credit losses of 3%. And because of that, we managed to keep prices very low. So we are cheaper cards on the market, and this is a result of like 5 years of continued research and development in this department. So in Monobank, credit risk is the biggest department. Okay, customer support is bigger, but apart from customer support, credit risk is the second biggest department, and it's like 50 people who doing day-to-day search for how to enhance a machine learning algorithm to make the credit decision better. So I think that's a thing that usually in traditional banks is a domain of chief risk officer who would be in the sunset of his career, let's just say that, and they used to scorecards, and I think that they innovated 20 years ago, and it's really tough to make this jump.
So you've been making a lot of jumps, Thomas.
I would say that actually that leads us to the hypothesis which is embedded in the title of this session. Yeah, that fintechs are better positioned to tackle the crisis such as wars. Yeah? Because for instance, if you are making credit assessment, one of the decisions you need to make is to decide whether this particular client, let it be consumer or a company, will be able and will be willing to repay the debt. Yeah? And in order to do that, typically you leverage the defined set of data and have some model which is trying to predict behavioral pattern, which were learned in the past. But then the black swan arrives, so the crisis, the war, the pandemic, or whatever, and the data you were basing on are typically less relevant or even inaccessible. The behavior of consumers or companies changed dramatically. So you need to very quickly adapt your model or maybe even reach out to different set of data. And I would say that in fact, fintechs may be those players who are able to do it in a quicker way than big regular banks.
You would be surprised, but because we were. We've noticed it when COVID started, that even though you have like a big jump on delinquency, but the model still works well. So the good clients are still paying, the bad clients are not paying. It's just like it's a bit degraded. And now there is a war in Ukraine. National Bank said that you can defer your payment. There is no late fees. There is nothing. Like no one would report you to the bureau. And still, like 75% of the customers decided to pay, even though they don't need to. And those are still separated by the same model. Of course, it's not that on point, but it's still relevant.
Same in our database, absolutely. So customers behave the same in terms of repayment of the debt, and we also have like 3% of delinquency, like NPL. However, all of the processes are done automatically, so no human touch in credit scoring assessment and things like that. And the model works well. However, we also have this cloud scoring, which is easy to rebuild and modify.
But I think, Tomek, what is the most important is, of course, maybe the fintech and the new players are say better adapted to this area. But I think the most important subject, as insight from that, is not say data itself, but what we behave, as Misha already said, that who is on the top. and who is making the guide on this tour and what we want to do, because the model itself can be quite easily adapted, but how fast we can make the change of regulation inside the institution, and how the institution later on will come to the regulator and ask, do I have the permission to do it that way, and so on and so forth. So I rather see that more, let's say, the work and times which you need to spend is around, not rather the pure model, more data, because everybody knows how to do it. We have a lot of good mathematicians, let's say, in the companies, and so on and so forth, but how to do it faster and better, explain the others, and especially the regulator. But my model is bulletproof. I have already said the track record, but I
or is at least much better than the one before. And
yes,
here's 100 data
absolutely,
points. Why?
Absolutely. No,
I think there's that big chasm of, it's like comparing CBDC to cash, and it's like, can we just please talk about functionality versus progress? When you're faced with this, does it become then an educational problem? Does it become an organizational ability to adapt to create the kind of impact that clearly you have in your hands with all the mathematicians in the room?
I think the adaptation is the key point here, and we have the clients all over the Europe, and we see different regulators from that perspective, and we see that
they don't seem to at least get along all out.
They still did the challenge, let's call it that way. But when we explain them once, second time, third time, you see that we have to make the progress. So we also opening more and more to these activities, especially after the Brexit, are more open on the European market for these old activities, knowing how much of them the startups are in the UK, how much of them are trying to move to the continental Europe. So I think it's also given this kind of speed for all this conversation between us, let's say the whole market and the regulator, because they need to find a way how to tackle this topic and find the proper tools how to monitor, because they are as a guide who need to make the monitor proper control the whole system, because now the domino can start somebody as a crisis and so on and so forth. So 28 can come back anyway.
And it will, right? I think we have history to.
That's why it's not worth to be a bank, in Europe, because we are not a bank, and we don't have to ask anyone to change the credit scoring. This is the advance of like fintech,
The regulatory framework to do it. I think I would be curious to know your parting thoughts of hope for this. Like I hear Tomasz talk about, regulation and us really understanding the speed and really bridging that from an educational perspective to say to them, hey, here's how we're doing this. Here's how we're leveraging technology to do this, to fix a human problem that is all of our problem. What's your hope, Tomasz, for whether it's data models or really fintech's role in all of this as a marketplace? Like, you're enabling a lot of this to happen. You enable a lot of fintechs to operate under and as part of the network. So.
Yeah, so my belief is that fintechs play a really important role in reacting to the crisis situation, because they may react much quicker. They are not tightened by the regulators, and they are able to more accurately assess needs of certain niches of the population, which may be in particularly badly affected by the crisis. Even though we need to, I think, admit that regular banks were also relatively quick in adapting to the crisis situation, at least here in Poland. Based on the example of the Ukrainian war, it took them days to prepare offers targeted to the Ukrainian refugees, helping them to solve their financial needs. Similarly with the pandemic, once they had to close branches, they were very quickly able to implement remote KYC processes and onboarding processes.
Ewa, your hope is that regulation is going to let you continue to innovate and continue to up those rates from 80 to 90 to 100, or what's the hope?
Well, we are living in Europe, and Europe is a highly regulated place. And main goal of the European Union Commission is to make Europe the best place to live in Earth. So it's their decision how they will lead this part of the world. Is it going to be more regulated, less regulated? quite good place to live. Not many people are excluded financially. So here I think that everything is it's gonna depend on how what the regulator will say. I think that they will be regulating more and more all the industries because they want the customer to be safe and this is the main principle.
Yeah, if they're greening DeFi, they're coming after just about everything.
So, look, I do agree, and I'm not in a place to give any recommendation to any regulator, especially like European one. But from my experience on observing UK credit market, and Ukrainian credit market, so the price for credit card in Ukraine and in UK are similar, though the cost of funding are much higher in Ukraine. And of course, there's prime cards which are cheaper, but near prime segment and subprime segment paying more in the UK than they pay in the Ukraine. And this, in my view, because of regulation, because regulator wanted to protect customers, and actually they end up paying more because of this protection. Yeah. So sometimes where you want to do something good for customers, overprotecting, you're actually harming them.
You know, I'll talk a lot about the regulator, but I still have the hope in people, you know, the people, because no, just also the people.
Yeah, I think that's serving for public interest.
Yes, absolutely that way. But you know, but even maybe I'm not on the sunset of my career because I'm over 50 now. But it's my second startup nowadays, and I think that everybody can now take this challenge.
We have to.
And you know, to start the new things. So I think this is nowadays when we have the more, let's say, constraints and the more, let's say, challenges. I think that the most innovative things is coming to the earth. So let's try to do it. Let's try to persuade all the others, say, as a market to the regulator that we can do something together. We will secure, and let's try to do it, say, from one more time for the good things. So
I think you should try to do it before the day ends tomorrow. Like it sounds like fintech, bank, Mastercard, cameras. It's like a nice deal. Smart contract on? No, anybody? I couldn't agree more, and I think it's so important to have these kinds of conversations. I think next time in the panel we're going to bring a regulator instead of just talking about the regulators. But for all of the regulators out there watching, thank you for watching. You're welcome here at Impact next year, guys. Thank you for sharing. I hope that we do create different solutions. That I see you guys push those boundaries of acceptance, and that we can get behind some of the excuses that exist, certainly in the technology industry, for not fixing some of these problems. That's certainly been my hope as an identity professional, to look and realize that we just have to fix it and stop hiding behind the millions that we just say, oh, well, that didn't go to who it was supposed to. So with that, I want to ask all of you to give them a warm welcome, applause for being part of this lovely panel and having this discussion. And let's continue this conversation out there. Thank you very much.